This is Zak Mir with the US Chartbreakers, the weekend edition, June the 3rd, here at Zak's Traders Cafe. And it's an AI stocks special, some obviously more AI than others, starting off with Arista Networks, where we temporarily made a new high through the March peak around $173. And we come back there, a bit of bearish divergence as well. So we're looking for the market to perhaps come back towards the 50-day moving average zone. The 50-day line currently around $154. The top of that gap there and the top of the gap down, or support before the gap down that we had in April, are also around that area. So that's the $150 zone, the favored zone for retracement. And then hopefully then we'll continue our way up that broadening triangle from the beginning of October. Best case scenario here is that we head up to the top, that resistance line projection from the latter part of last year as high as $192. And that could happen as soon as the end of next month. Sub 150 would obviously delay the upside scenario and maybe question whether this was not the best of the run. A rally that's obviously come back up from the $90 level back this time last year. Next contender is Crowdstrike, and here we've got perhaps a more complicated situation even than the previous stock. We've got a resistance line there from back in August last year. We've also got the top of a broadening triangle there from December. Both those lines converge around the $160 mark. That's the level to break if we're looking for a new leg to the upside. A new leg to the upside might take the form of a move to the top of that rising trend channel from back in November, parallel with this line here, $124. That's heading for around the $184 mark. So breaking 160 could target as high as 184. That would take us back to where we were in September. Otherwise, we're probably looking for a test of support there towards the 200-day moving average and March-April resistance in the upper 130s. But at least while we are up above the upper 130s, maybe call the 50-day line at 134 a stop loss, then we do have the possibility of a move up to the mid 180s and a return to where we were in the late summer of last year. DataDog is a stock which I've covered quite a few times in the normal chart breakers, let's say, and here, interesting that we managed to hit our initial target there around $95. Next leg up would be a September resistance line projection up to $110, hopefully by the end of next month, if we're really lucky by the end of this month. Upside valid while we hold above the old initial 2023 resistance at 90. So above 90, really looking for $110. Any dips towards the low 90s regarded as a potential technical buy zone. Moving on to Google. And here, or as it's known these days, Alphabet. These days, we've seen the recovery from a breakout through the 200-day moving average that we had. The successful one, basically at the beginning of April, a bit of consolidation there, made it look as though 110 would be the top of the stock, and obviously it wasn't. We had an old resistance line target there from back in September up to $113, managed to achieve that. The next leg up could be as high as $141 after this mid-move consolidation that we've got at the moment. Unfilled gap to the upside earlier this month, or rather earlier last month, a very strong signal that does suggest that we have the firepower to break through $127 recent resistance and head up to $141 as soon as the end of next month. It's also noticeable that the support we've got at the moment is actually just above, or at and above, old resistance from back in August last year. So another bullish sign there. 50 and 200-day lines both rising. We're not overbought at the moment either, so it looks as though an end-of-day close through 127 should do the trick for Alphabet. On to Microsoft, which has been another winner. One could say from the AI phenomenon, we had that handbrake turn there, so we were actually falling, and then at the end of April, and then gapped up and never filled that gap. Another gap higher for the end of May as well. So this looks as though we've got a pretty strong situation going here. Above the recent resistance around $338, looking for a fresh leg up to $360, ideally by the end of next month or even sooner. The upside valid while we're above recent support, intraday support around $335. You can see there's old resistance there around $315 and the bottom of that gap as well. But ideally at the moment we just stay above $325 and head up to $360 on Microsoft. Micron is next, and another regular in the chart breakers, but here we've managed to hit the target that we were looking for at the top of that rising trend channel from August. That was around $74. Gap down, which is rather eerie, but at least while we're above the previous early May resistance at $68, looking for a move up to retest the best levels of the year to date up to 75 plus. You can see looking back that the shares are now back where they were basically this time last year, and it's interesting that if that suggests that obviously at that time there was no AI in the mix. If we're still at the same price or less than we were before AI was in the mix, then we could head much higher than $75, $76. Next level up, if we get through that $76 zone, as high as $80 by the end of next month, but only back below 68, really risking a test of 64, 65, which was the pre-May breakout resistance for the shares. Moving along to Marvel, and here we've got stock which has been one of the best rises in the recent past. The situation, probably the poster child, one could say, for the AI area. Here you can see that the breakout over the last, well, it was just the last week or so, been absolutely spectacular. We were looking for $60 previously, and obviously that was a best case scenario target. Now above at the top of the gap there at 58, looking for as high as $76 by the end of next month. If there is a retracement at the favored zone, obviously back down towards the low 50s, which is where the shares were basically back in September or so. So above 58, looking for 76 on Marvel. And Nvidia obviously has been a high-profile winner in the AI boom. Same sort of chart pattern as Marvel. Top of the gap, though, rather, at 365. And above that, we're looking for the shares to hit not only 440 by the end of next month, but maybe later this year as high as the $510 area. But the key here really is holding around the 360 to 370 zone. Always difficult to know exactly how far a stock will retrace, because it always wants to retrace a bit further than investors are prepared to countenance. On to Palo Alto, which has just delivered its breakout, unfilled gap to the upside. We had Bear Trap Island reversal and then another gap higher over the last couple of months. So pretty intense technicals going on there, charting patterns going on there. We're looking for $233 by the end of next month. Big picture target here as high as $260, maybe over by the end of the summer, within a rising trend channel that's been in place basically since the early part of last year. So the floor of the channel there at around $150 at the moment. But the key here really is holding above the low 200s, so 200, 205 would be very helpful and very nice indeed. And as you can see again, that other pattern of new support here coming in just at and above old resistance, in this case from the early part of last year. Finishing off with Snowflake, and here the picture rather different from the other stocks we're looking at, but we do have a setup of sorts. So a gap close, well, in fact, it's an island reversal of sorts, but a gap close there. So closing above the top of that gap there around the $171 mark. That was from the end of last month. But we've still got this big line of resistance there from back in August. That's around $182. So we need an end of day close through 182. Presumably, stocks being what they are, the shares will give the impression that the shares are going to fail there. But an end of day close above that, when we get it, could deliver a target up to $220 as soon as the end of next month. On the downside, maybe there's a need for a test into the $160 area, just towards the 200-day moving average, but hopefully the shares will remain above the floor of the latest gap around 168, break 182, and then head up to $220. That's it from me today. More updates during the week.